Mike, you've outlined once again your plans to split the business and concentrate on fast-growing areas in Asia and Africa as well. But has the pandemic done anything to change how you see the business going forward? Has it changed your strategic priorities at all?
No, it hasn't. Again, thanks for having me this morning. I think it's shown a couple of things. The resilience of the business. Our operating profits in Asia were up 13%. Our embedded value is up 13% to 44 billion. What you saw with the pandemic is the market got more comfortable, and as our agents got more comfortable using virtual presentation techniques and digital, the second half sales were 20% above the first half sales. And what you saw was a really resilient performance in the peak of the challenge, I think, that came from the pandemic. And then that positions the business very effectively for where we need to be now coming out of it. Again, most of our markets in Asia, there's some return to some semblance of normalcy.
We've talked about Jackson for a long time, of course. You talked about the IPO in the middle of last year. Now the demerger was mentioned in late January as well. But just to remind our viewers, for who may be thinking, actually a diversified business model where you have got that US exposure would perhaps complement your activities in other regions. Just why, for our viewers again, do you think the Jackson demerger going forward is the right way for your company?
Well, I think the demerger, very much like our 2019 demerger of M&G Pru in the UK, gives the investor the option to decide how much of each of the businesses they want to own. And I think the ability to create a pure play on Asia and Africa that has our almost 100-year footprint in that region, again, the recurring earnings, the compounding growth we've had there over the years, and exceptional profitability we've had there over the years. That gives the consumer and the institutional or retail shareholder the choice of what part of the portfolio they want to own and what mix of those assets they want to own. And each of these businesses is so large now, they're obviously capable of being standalone companies. So I think it's the right time for the group to have separate pieces. And I think for the individual shareholders and the institutions that own us, it's their choice on what that combination looks like now.
Mike, for a business that was formed in the UK back in 1848, Prudential's come an awful long way, and now it's primarily a mostly Asia-focused business, and I think that's where you, the management, want it to be. You've talked about raising additional capital here, 2.5 to 3 billion through a global offering. What are you going to use the money for?
So, Jeff, the intent with the money is we have some fairly high coupon debt in this relative to what's available to us in the current market. So strengthen the balance sheet. Opportunistically, some of the work we've done in Asia, and we saw us announce yet another bank relationship again this morning. We're at 20,000 branches now that Prudential's products are available across Asia. Some of the digital initiatives you've seen, Pulse, as we talked the last time we met about Pulse, is now at 20 million downloads. And it just gives us more firepower to keep investing in Asia. If you look at the money we put into Asia for our investors in 2020, for every dollar we invested, if you will, it returned $4 in new business profit. So the margins we're getting are unique, and our scale and our breadth in the market gives us plenty of opportunity to invest that capital. We just think it's the right time to do it.
Yeah, and you and I had a great conversation not that long ago about your new digital medical offering and how this is a bit of a push for you at Prudential at the moment. I wonder, can you share with us, as you think about where those funds go, how much of that is going to go in new technology as it applies to offering services to your customers that perhaps don't exist at the moment?
Jeff, it's a great question. I think what you're seeing now is, so we have 600,000 plus agents. We have 20,000, plus branches of banks that we're available in. And now you have 2 million plus downloads in the digital space. What's, I think, more interesting than any of those one numbers standalone is the integration of those. Almost every bank partner we have is building a digital bank platform in Asia. It's almost seen as a requirement for success going forward, a prerequisite. The agency channel got 2.2 million leads, did over 200 million in traditional sales of products last year from clients who came to us on the Pulse platform, 70% of which weren't with Prudential prior, and they are on average about 10 years younger than our traditional clients. So I think these channels are integrating. And I think where I'm incredibly happy with the work the team's done on digital, I think it's a part of everyday life for a bank distributor and for our best agents. So I think what you're seeing is a blurring of the channels, and basically just aligning with what the customer wants, when they want it, and staying customer-centric is the key here.